Improvements in the US labor market and cheaper oil prices may have allowed consumers to increase spending. However, retail sales disappointed again this month with a minus 0.6% figure, which is the third monthly contraction. Joining me on the line now to discuss this data is Joseph Lake from the Economist Intelligence Unit in New York City. So Joseph, why are we seeing a decline in retail sales again this month?
Sure, the retail sales numbers were a little bit disappointing, but they were not entirely unexpected. We were expecting a bit of a pullback, and there were two main reasons for this. First of all, looking at the retail numbers, it was pretty broad-based, this decline in sales. So it wasn't concentrated in any one sector. And that suggests that part of the cause was the extreme weather in parts of the country, which just prevented people from getting out to the stores and buying cars and buying different goods and services that they normally would have done so in February. And we had expected a bit of a softening in the retail numbers because of that. And the second main reason, and this is really important and it's more of a technical issue, but it's that the retail sales numbers are reported in nominal terms. And the US has just recently entered a sort of what we expect to be a very short period of deflation. So prices are actually falling across the country. And so when you're reporting retail sales numbers in nominal terms and prices are falling, you would expect retail sales totals to fall. But if you look at the real figures, so in inflation in adjusted terms, they should be much better.
And what will drive retail sales in the coming months?
Consumer spending really entered 2015 on an absolute tear, and it's in extremely good shape. And everything that we've seen since the turn of the year, particularly the strong job growth and the cheap oil prices, suggests that it will maintain this momentum in the first quarter. So real private consumption increased by 4.3% in the fourth quarter of last year, and that was the fastest pace in 9 years. So consumers are spending an incredible amount of money at the cash register. They've really benefited from the dramatic decline in the global oil price, which has reduced the cost of petrol and heating, and it's really boosted disposable income in particular. So if you look back at the personal income and spending report for January, real disposable income surged by 0.9% in January. That was the fastest rise in disposable income in 2 years. And we expect consumers to save some of those some of this windfall, but also spend quite a bit of it as well.
Now, what are you expecting from the University of Michigan Confidence on Friday?
Well, consumer confidence hit an 11-year high in January, and it eased back a bit in February. We wouldn't be surprised if there was another slight easing on Friday, but even if that is the case, there's nothing to worry about. It's still at extremely high levels by historical standards. And two main factors are sustaining this really strong consumer confidence. One, as we just talked about, is the cheaper gas and heating bills because of the plummet in the global oil price. And two, the jobs market is just on such a roll at the moment. Last year was the best year for the labour market since 1999. It's kept up this momentum in 2015. January and February, we had really good, strong job growth, and it's accelerating. And monthly job growth has been over 200,000 for 12 consecutive months now. And that's the first time that we've seen that since the boom years of the 1990s. And this large, consistent, and sustained expansion in employment is just transforming the U.S. economy. It's putting millions of Americans back to work and it's repairing a lot of the damage that was caused by the financial crisis. So we expect consumer confidence to remain extremely high on Friday, but we would not be surprised if it pulled back slightly from the recent historical highs.
Well, thank you very much, Joseph. That is all from me for today, but do join us again tomorrow for the last trading day of the week. Goodbye for now.